Vertex Pharmaceuticals, Inc., NASDAQ, VRTX Due Diligence Report Date. September 2025 Executive Summary. Vertex is a large-cap biopharma best known for its cystic fibrosis, CF franchise, Trikafta, Kaftrio, and related medicines. Q2 2025 revenue was about $2.96 billion, with GAAP net income of roughly $1 billion. Market cap is around $100 billion as of September 2025. Management reiterated 2025 revenue guidance of $11.85, $12 billion, driven by continued CF strength and early contributions from Alyftrek, Jernafs, and Casgevy. Bottom line, a cash-generative CF franchise with attractive margins and growth, plus a pipeline that could diversify revenue, but long-term investor returns hinge on pipeline diversification and disciplined R&D spending. 1. Company overview and business model. Vertex discovers, develops, and commercializes therapies for cystic fibrosis and other genetically defined diseases. Business model: commercialize high-margin medicines while reinvesting profits into R&D across small molecules, gene editing, and cell gene platforms. 2. Industry and market position sector: biotechnology, specialty pharmaceuticals. Vertex is the clear market leader in CF treatments, with durable pricing power and global commercial reach. One of the largest biotech companies by market cap, with high expectations for pipeline delivery. 3. Revenue streams: core CF modulators, Trikafta, Kaftrio, and related drugs. New launches: Alyftrek Jernafs, non-opioid pain medicine, Casgevy gene editing product. Other: collaboration and licensing income limited. For competitive advantages, dominant position in CF with decades of expertise. Strong cash flows and margins enabling large R&D investments. Broad capabilities across small molecules, gene therapy, and gene editing. 5. Scalability: proven scalability in CF through global rollouts and pediatric expansions. Future scalability depends on clinical success of new gene editing and rare disease programs. 6. Financial statement analysis. Q2 2025. Revenue: $2.96 billion. GAAP net income $1 billion. FY 2024 revenue $11 billion. 2025 guidance $11.85, $11 billion. Strong operating margins supported by CF therapies, though R&D spending can pressure near-term profits. Balance sheet: strong cash flows, low debt, solid liquidity for R&D and potential acquisitions. 7. Key valuation metrics. Approx. Market cap $100 PETM. High 20s. EV, EBITDA. Premium relative to large-cap biopharma peers. PS. Elevated but justified by durable cash flows. 8. Growth potential and TAM. CF market remains large with strong per-patient revenue and expansion potential. Pipeline offers new TAM in gene editing, genetic diseases, and pain management. Multiple new launches expected through 2028. 9. Competitor landscape. Direct: few competitors in CF. Indirect: broader competition in pain management and gene therapies from large pharma and biotech firms. 10. Management and governance. Experienced leadership team with strong R&D and commercial background. Recent leadership changes, for example, CSO retirement, raise some questions about continuity. 11. Risks: pipeline risk. Clinical trial setbacks could reduce growth prospects. Concentration risk: heavy reliance on CF revenue. R&D spending: high investment may compress margins. Regulatory pricing risk: potential pricing scrutiny in the U.S. and abroad. Market sentiment: stock is sensitive to guidance and pipeline updates. 12. Dividends/shareholder returns. Vertex does not pay a dividend. Capital allocation focuses on R&D, selective M&A, and occasional buybacks. 13. Insider and institutional activity. Significant institutional ownership. Insider activity limited. Monitor SEC filings for any notable changes. 14. Technical analysis signals: shares dropped after Q2 2025 results despite a revenue beat reflecting pipeline concerns. Expect volatility around clinical readouts, guidance updates, and regulatory events. 15 recent analyst ratings and news analysts acknowledged strong CF performance, but lowered targets after program reprioritizations. Paused pain candidate and narrowed JRNAF scope, reduced some long-term upside. Management reaffirmed guidance, but analysts remained cautious on pipeline execution. Investment thesis bull case. Durable CF franchise funds diversification into gene editing and rare diseases. Successful new launches could drive multi-year growth. Bear case. Pipeline disappointments, concentration in CF or pricing pressures could compress valuation multiples. Key catalysts. Gene editing and rare disease trial results. Uptake of Aletrec, JRNAFs, and Casgevy. Revenue and earnings guidance updates. Management succession plans. Potential partnerships or acquisitions. Quick reference headline numbers. Q2 2025 revenue, $2.96 billion, Q2 2025G, AAP net income, $1.0 B 2025 revenue guidance, $11.85, $12 billion market cap September 2025, $100 billion,